Hey Christina, Terry Dyer here. How's it going? I am the mortgage broker, real estate broker that sent you a couple emails. Set up that little search for you, where you're getting those properties, what they call streamed to you. I'm looking for that where I set that up. Here it is. And let's see. This is something new I just got. Let's see if you're on here yet. Huh, I thought I just set it up, but oh, here it is. Okay, yeah. So I set this up for you. A little bit of a search. It's pretty cool because I like it because the pictures are really big, and I set up for all of Carlsbad single-family homes between 700 and 400 or 700 and $900,000, and it's pretty cool. You can go over here and move this over. You go over here and turn this map off, and then you just get more properties just like that. And then you can go up here and put some filters in there, and or you can go over here and add a zip code. So that's it. It's a pretty simple search site. I think it's pretty cool. I hope you like it. I'm not trying to step on anybody's toes. If you have an agent that you're working with, I just thought it'd be cool. I have it. It's there. Why not share, right? All right. So let's move on to your loan information. Here's who you are, Christina. At least the information as provided the lending tree. Okay. Just nothing but the basic stuff. I noticed that you rent this property here. And you gotta forgive me for being so intrusive, but I like to know who I'm talking to. And the reason I like to know that is so I can do a better job for you. When I call you up, I like to have some insights. It takes me some time to figure that out. But hey, when we talk, I know what I'm talking about. I don't have to ask you 20 questions. So let's see now. What do I have here? I went and looked at your website. See what you got going on in your world, in your business world. And pretty cool. I really like what you say here. That verbiage, that's really nice. So anyway, just want to check out a little bit about who Christine is so I'm better able to help you. I do have a client named Hess, but she lives in East County. I'm not sure that you two would be related. So let's move on to the loan thing, okay? You said that on your lending tree stuff there. Let me get rid of these people up here. Not that there's any personal information. There is not, other than a name. But anyway, let's go over here. So you think about buying a single-family home there in Carlsbad. And I'm going to assume that your credit score is 760. And we're going to do a 90% loan to value, or you're going to have 10% down, in other words, right? Single family, I assume. If not, it's condo or townhouse. Either way, it's not going to make any difference in the financing. However, if it is attached, you're going to need to check and see. If we can check and see if that attached home is FHA approved. A lot of times those associations, well, they may or may not be. So non-conforming in that is non-conforming because it's not a Fannie Mae or Freddie Mac product, okay? This is a Fannie Mae or Freddie Mac product. These things don't exist anymore. And so anyway, we are in a jumbo or non-conforming world when we're talking about doing your loan. And so let's plug this number in here and see what we come up with at 90%, a 90% jumbo. This is pretty good. Loan Depot, I don't know if you've seen them on television, but Loan Depot, they're, I forget, the nation's second largest non-bank mortgage company. I think I just saw that. Anyway, this is cool because this is a loan without any mortgage insurance. You may be aware that if you have less than 20%, the lender's going to want to have some less than 20% down or less than 80%, more than 80% loan to value. The lender's going to want to see some insurance on there, mortgage insurance, which is expensive. But here they're giving us several options without any mortgage insurance. So let me explain to you what you're looking at. Up here I put your numbers in here, right? And down here, well, what this is a thing called Loan Sifter. It's some software that we license, and in here it has a bunch of different lenders. Let's see now, I don't know if it really matters, but there's a couple hundred different lenders in there. And so what we do is we search the programs. Now it says approved investor, and I'm not approved with a couple hundred lenders. Who needs to be, right? The fact of the matter is I'm approved with the best lenders. And Loan Depot happens to be one of them. Quicken Loans, as you know, there's a name that you know. Maybe you've heard of Ditech or Caliber. So these are the top names that we do business with and that are probably calling you. I know Quicken probably is. They're the most aggressive guys. But the thing about them, all they have is what Quicken has. You know, they don't have a lot of these products that I have. So, and they're also not as priced as competitively as a couple other lenders. Loan Depot, on one hand, really likes your loan. They want to give you a rate of 5 3/8. Now, what's important about this is there's no mortgage insurance. Okay, so that's what's important. That's a really good loan. 5 3/8. What happens here? They're giving you $2,800 for closing costs. Okay, that's credit to you. Now, I don't know if you've ever owned a home before, but years past, prior to Dodd-Frank, actually, 2010, any money in the rebate, this is called the rebate right here, that's money coming back from the lender as a function of the rate. And so as that rate goes up, that rebate gets higher, and reversely, as it goes down, the cost of getting this loan goes up. So this rate here is 5.375, as is the case with all these different lenders. So what you're able to see, Christina, is that all these lenders in here, they all have a different perspective on your loan. Loan Depot is aggressive. They want to pay you $2,800 or help you by giving you $2,800 towards your closing cost in order to entice you or basically me, so that via me, you're enticed to send them their business, your loan. Now Caliber down here, on the other hand, is they want $1,600 for this loan. So 16,000. Not too exciting. Now the number that you're seeing over here, this is how much Hanson Loans is paid. Okay, with our lenders, we have an agreement where we are compensated at a rate of 1.375%. Slight variation depending, it can be 1.34 or 1.36, but depending on how they print it on here. But it's generally 1.375% of the dollar volume of business that we send these lenders. Our compensation has nothing to do with interest rate and nothing to do with anything else other than loan volume. So hopefully that gives you some peace of mind that basically my interests aren't compromised. My motivation is to get you the best deal that I can, because in so doing I'm going to be the most competitive lender with whom you're going to be speaking, right? Okay, so that's where I'm at on this. So Quicken's calling you. Well, Quicken's not going to have the best terms on this product, okay? So what if you were doing an 80% loan? So right here we have a 90% loan, and it's showing the payment is $48.99 with no MI. So let's take this and do an 80% loan. So we're going to go from a payment of $48.99 to, pause, there we go, to, well, $46.97. $48.99 to $46.97. So that's a couple $100. That's a couple $100 less in the payment and a little bit lower rate, right? And so, but we still have a 10% second that we have to do up here. And so that's going to be for about $80,000, or it's going to be 10% of the purchase price. So it'd be about $100 grand, and that's going to be at it's about a point a quarter over prime. Prime's at 5.5, so you'd be about 6 3/4. The first 10 years of that is interest only, so you'd have about 100 grand out there at interest only at 6 3/4 for the first 10 years. After the first 10 years, the rate, the rate stays the same, but the payment becomes fully amortized. Okay, so, and I'll double check that for you, but I just had this conversation yesterday for the client, the video that I just sent you actually. So that's where you'd be at. We could do an 80-10-10. In which case your payment on your first would be $46.97. Now if we come across here to put this in here and put this in here, what I'm looking at right here is 5% at 1.1 million. So what I'm looking at here is my loan software. So let's go 4.875, and let's put a loan amount at purchase price in here 1.1. And we'll do 10% down to 125. That's too much. Okay, so here we go. Let's do 20% down, and then we're going to have a second. So let me go through here and put that in there. Let's do 100 grand down. and 6.75, and let's make that qual rate is 6.75, and then your 360, doesn't really matter the term, and then this is going to be interest only for about the first 120 months or 10 years, in which case you're going to have the cool thing about this is when you don't have mortgage insurance, you don't have a rate that reflects lender-paid mortgage insurance. And excuse me, you have $100,000 of that purchase price that's been now financed for you at interest only. So servicing that debt is a little bit less expensive. You always have the option of going ahead and prepaying it anytime that you want to. So, keep that in mind. But anyway, you're going to have a payment of about $562. And we're going to add your taxes on there. Taxes are going to be about 1.2% of the purchase price. That's California tax rate, okay? Carlsbad, you may have some Mellows on the property that you're looking at. And mortgage insurance, we'll leave that off right now. So assuming we did it this way, you'd be looking at a payment of about $63.59. Okay, so TI. And of course, a lot of those properties, again, in Carlsbad have HOAs too. Not all, of course, but many do, or Mellows. So let's go back up here and do the 90%, straight 90%. And see which of these makes the most sense for you. Yeah, see, then we're all the way up to 5 3/8 at getting $3,100 back. So 5 3/8 gets a payment of $55.12 versus $46.57. Yeah, see that $55.12. We're going to be like $5,200 right here. That's $55.12. So saving you $300 a month. There's no mortgage insurance. That's the way to go right there, it seems. I mean, unless I'm doing something wrong. Yeah. And CLTV is 90. So where is that CLTV coming up at? Anyway, I don't have it in here correctly, but I have these numbers correct. So you'd be looking at about $6,400 a month, just PI/TI with your second, okay? And yeah, I think that's going to be the best option for you. So let me know what you think. I'd be happy to do whatever you want to do. But let me know. Maybe we could do a 5-1. Let's check out a 5-1. See if we can do one of those. Keep it lower. Keep your payment lower. ARM 5-1 at 90%. That's a challenge. A lot of times they're at 75% max, so we'll see what they say. Oh, there we go. We can do a 5-1, but see, the benefit isn't really there because you're only getting a couple grand more in rebate at 5 3/8 than you are at the 30-year fixed. And the reason for that is because, I don't want to get too deep in the trenches here, but the reason for that is because of this number right here. We go to interest rates on CBS Market Watch, and what you see right here is the 10-year Treasury. And if you go look at the other Treasury rates, the 2.57 and 2.57, 10, 20, and so forth, you'll find that these yields are really compressed. They're rather close to each other. So typically there's a bigger spread between the duration of the bonds, but when there is not, it's a compressed yield curve. And what that results in is the shorter term mortgage rates and the longer term mortgage rates being pretty close. And that's where we're at right now. As a matter of fact, we recently had an inverted yield curve, which is a precursor, typically, economically speaking, of a recession. But anyway, like I said, don't want to get too far in the weeds. So that's it, Christina. I think that's it. I think your best option is this one right here. I think that's going to keep your payment as low as possible. Okay. So I hope you found this helpful. It was a little bit longer than I had intended for it to go, but whatever. It is what it is, right? Hope you're having a good one. If you have any more questions, want me to run another scenario, you let me know.